Yeah. Welcome back. Welcome back. It's Monday. Y'all
Welcome
know what it
back.
is.
Top of the
Y'all
top.
know what it is.
Top
Every
of the
day of the week.
top.
That's a fact, man. We here. We blessed. Happy to be here. Shout out to everybody that's here with us. Another day in the market. Spring break for the kids.
Wow.
Shout out to all the parents out there, man. Shout out to all the
I
kids
thank y'all
that
for an
need.
amazing episode last week. Numbers.
Yeah, man. The numbers was running. Shout
Classic.
out to Market Mondays last week was incredible. Blackout was incredible. Shout out to Tamika Mallory for being a guest on. She's incredible. Her book is incredible. Go pick that up.
After the
Pinky Co
Pinky Cole interview.
Pinky
Oh,
Co episode dropped last week. Shout out to her. That was incredible. Shout out to everybody that's been
yeah.
just supporting. I mean, our day ones is our day ones, but we get new people that come aboard every day. So shout out to all y'all for spreading the word.
I know everybody wants to get funding and get capital and angel and VC. Probably the most important episode of this year, if you're an entrepreneur. There's a lot of traps. It's a bull trap in the market. It's a lot of bull traps in AI, angel investing in VC. Please go watch the episode twice.
That's
Yeah.
a
She
fact.
was fortunate enough to get her company back.
Mm-hmm.
What about those who going through that same story and didn't have anyone to rely on, didn't have good legal, and it's over with?
Yeah, you lost it.
That's a
Yeah.
fact. Shout out to Pinky. That was a legendary episode. And man, we back. We cooking up. This week blackout. We got Angela Rye.
Mm-hmm.
Hey,
That's gonna be a good one. And Earning Leisure, we not scheduled for episode, but you never know. Trump might do something crazy. We might have to come on emergency. So stay tuned. We'll let you know Thursday. Just keep Thursday open just in case.
Studio travels.
You never know what could happen. But man, we're gonna get right to it. I will say this. Shout out to everybody that purchased You Deserve to Be Rich, New York Times bestseller.
Mm-hmm.
So we're doing leg 2 of a tour.
Yep.
And we hitting a few.
oh, word, okay.
Yeah. We back out. We back out on road.
We're gonna hit a few places that we didn't get a chance to hit. So the first 2 is one of my favorite cities of all time, Detroit.
What up, though?
Shout out to Detroit. Detroit's so
Shout out to
thorough,
you.
man. Detroit's
Yeah.
so thorough. Like everybody out there is just super solid. I love, every time we go to Detroit, it's great energy. Definitely one of my favorite places for sure. So much love. Shout out to Ken. Shout out to everybody in Detroit, man. So we'll be in Detroit
Mario, what up?
April 22nd for our stop at the book tour. And then we go into New Haven, Connecticut.
Yeah.
Hey,
Connecticut. Connecticut.
Not far from my home.
Yeah, New
shout
Haven,
out to my people
Connecticut,
in Connecticut.
May 3rd. May 3rd. So we got 2 more dates that's added. April 22nd in Detroit and May 3rd in New Haven, Connecticut. You can go to youdeservetoberich.com to get your ticket. The price of admission is the purchase of a book. So it's like $30. And if you've seen what we did the last tour, we bring surprises, we bring guests out. It's not just a signing. Like we talk, we give information. It's a whole vibe. So Detroit, Michigan, April 22nd, New Haven, Connecticut, May 3rd. Go to youdeservetoberich.com, get your tickets. And we're gonna see y'all there, man.
Yeah, that's not the last stops though. Y'all, all right, everybody. There's a few other cities. We've seen y'all. Yeah, those just the next 2. So just all right. And shout out to everybody in EYLU, man. We had our book club yesterday. The authors of You Deserve to Be Rich with a special guest. Shout out to G, my brother, for hosting it. It was incredible. We was on there for 2 hours talking about the book, talking about our personal stories. Everybody that was tapped in, all the earners. It was insightful, man. So shout out to y'all. But yeah, if you don't have the book, if you haven't gifted the book, please do so.
And then also April 22nd, we're going April
24th.
24th.
Yes.
We're going to be in Richmond, Virginia. Shout out to Richmond. And that's for the Big Dipper Summit. So you can go to bigdippersummit.com for that. That's separate from the book tour, but we will be in your area, Richmond, Virginia. Shout out to VA.
Virginia, I told you he was coming back. We was just there a few weeks ago. We said we'd be back, and we back.
2 up, 2 down.
Yeah.
Okay. Ian, any announcements?
When them dates get extended, that's when things are going well. Woo, my boy, shoot me a text. If you want to get rich from the market, go to ianinvest.com. Prices will be out today. Had an amazing call last week. If you wanted to know where to get in, where to get out, what stocks to stay away from, 3 prices for every stock that we have in there, go to ianinvest.com. If I made you money, please put yes in chat. I told you what would happen with TSM. Told you with Nvidia. Told you with Microsoft. Told you about Apple. So, and And Sniper 2 coming soon. Maybe InvestFest. I may move the date back and do some special. Get your tickets to InvestFest. Get your tickets to InvestFest, please.
That's a fact.
Investfest.com.
That's cooking up.
Troy.
Yeah, on a much more somber note, I want to express our extreme condolences to our brother Jay Goodwin, who lost his mom last week. Spoke to him. He's in good spirits, but prayers to him and his family. He's a good friend of ours. Grew up with him, lived up down the street from him most of my life. And obviously he's been with us a lot when we on road. So shout out to Jay, and our prayers and thoughts are with you, my brother.
Shout out Jay. Crew love, man. Somebody that's super solid. Hold your head. Spoke to him a little while ago, man. Yeah, hold your head, my brother.
Yeah, for sure. All right, y'all know how this works.
Real quick, got to cherish the time that we have, because we get into the age where we're having to parent. Please don't take a moment with your parents or grandparents for granted. I'm begging you guys.
Yeah, it was unfortunate, man. We were actually, our parents were in the hospital at the same time, and we had seen each other maybe, this was like 3 weeks ago. So when I got the news, I was just like, that's horrific, man. Close friend of ours, man. But yeah, our prayers are with him, and if you know him on Instagram, show him some love. But yeah, you know how this works, man. Do your own research. This is our disclaimer. Our content must be used for informational purposes only. It's very important to do your own analysis before making any investment based on your own personal circumstances. You should take independent financial advice from a professional in connection with, or independently research and verify any information that you find on our show and wish to rely upon, whether for the purpose of making an investment decision or otherwise. This is a message brought to you by the good brothers at Earn Your Leisure and the good brother Ian Dunlap, the master investor himself. Continue to do the research, share the research, show love. Let's build knowledge. Let's build community. Let's make some money.
And shout out to 19 Keys for a dope show in Boston.
Yes.
See you cooking.
Keys.
Proud of you, my brother, for real.
Shout out to Keys, man.
Yeah. The coffee meetup.
All
right, let's get to it. So we're gonna talk about Nvidia. Nvidia committed 500. Well, before we talk about Nvidia, let's talk about the Trump tariffs again. So over the weekend, they said that they were going to give an exemption for smartphones and computer chips, and that was very welcomed by the technology sector. They said 90 days. And then yesterday, they came out and said that it'll be a special tariff for semiconductors, that this is only temporary, pretty much dampened the whole party. So the market, as a result, it wasn't as bullish today as people thought it might have been if they didn't make that announcement. So, okay. For the investors that's wondering, how come they didn't wait to make this announcement? Or how come they didn't make the first announcement on Monday and at least give people an opportunity to exit some positions and then maybe rain on the parade on Wednesday?
I mean, he's given all of his friends, allegedly, inside indicators of what to buy. Shout out to all the Congress people and politicians who bought calls on Apple and Nvidia as a result.
Friday afternoon.
Better question for you, since you go run for office in the next one. Why do you think he keeps changing course so quickly? Like, I had to go to ChatGPT, Claude. I went on Madness. Like, what's the reason behind all of this chaos? And I'm not piling on Trump this episode, but I don't understand why you put out positive news and then the next day damper it.
Yeah, I'm not sure. I don't think anybody really knows. I think it's a very erratic behavior, and it's frustrating to like market insiders and hedge fund managers and stuff like that, because it's like, you know, Dan Ives was extremely happy when they had that announcement. Then he said it's like playing golf and they moving the tee in the ninth
Sure.
Or the 18th green. So it's just it's very complicated and it's difficult, because it's like, you know, we don't know. But we spoke to an executive at a car company during All-Star Week, and this is before the tariffs thing came out, and he said that it's extremely difficult to do business because we don't know the rules. So you can once you know the rules, and you can play the game. But when the rules keep changing, that becomes extremely difficult to play the game. So, you know, when you say that there's a pause on tariffs for electronics, smartphones, and chips, and that's encouraging news for technology. But then when you come out 2 days later and say that there's going to be a special tariff just for chips, well, that's discouraging news. So within a 48-hour cycle, it's going in so many different directions, and it's up down. That's why it's a very choppy, very choppy market right now. That's why a lot of people just wait on the sidelines because they don't know exactly what to expect. And we all know that the stock market's going to recover over the course of time. But I mean, if we do go into a recession, then you could see another 20% dip in the market. So it's very erratic behavior. I think that he's trying to figure it out on the fly, because especially we haven't talked about the 10-year treasury, but that's something that was extremely alarming to them. That's what they said. Like, that actually made him change his mind more than anything. Not really the stock market, but the treasury. And when people stop believing in America and stop, you know, holding American bonds, Japan, that's concerning.
Yeah,
that's concerning for sure. So I think he's trying to balance so much. You see the dollar drop to its lowest level since 2022. I think people are dumping treasury bonds. The stock market is crashing. Then you got world leaders calling you, I'm sure, left and right. So imagine just being in a room with 10,000 things happening simultaneously, and it's just like, okay, damn, I gotta do this. Okay, let's reverse course. Okay, let's do this. Let's do this. Let's do that. And it's not like something that I think is already thought out. I think it's in game. I think he's doing the Peyton Manning, like Omaha. He's calling audibles on the fly.
Yeah, I think this is the epitome of building a plane while flying it. Right, like we're not sure what we're doing, but we're going to try to piece this together as we go. We're going to make an announcement, and then we'll try to figure it out after we do it. It's like last week when it was, well, the 3rd of April, when the tariffs were going into effect, and then we saw how the market reacted to it, and then there was a leak that the tariffs were suspended last Monday. And it was a leak. That's not true. And then by Wednesday, it actually was true, right? And then Saturday, it's, hey, we're gonna suspend tariffs on semiconductors, computers, and technology. Pretty much, technology stocks were hopeful, like this is great. And then by Sunday, that changes, and who knows what happens tomorrow, right? We really don't have a clue of what's happening from a business standpoint. It's tough because, number one, you don't know how much you're going to pay, and then you don't know how much you're going to make. And so you don't really know what to tell your shareholders, and you don't know what your revenue is going to be, right? And so the thing that doesn't change for you is the debt.
For sure.
Right. That's the thing that you know for sure is going to happen, right? If you're having CapEx expenditures and there's debt that's accumulating, that's not going anywhere. How much you're bringing in, how much you're going to pay for that, that is uncertain. So, I mean, the uncertainty in itself is extreme. The recession piece, it almost feels like we were headed for a soft landing. I know, but it was like never going to be a soft landing, but we were headed there. And now we got this self-inflicted wound. And now it almost feels like recession might be the safest thing. If you hear what Ray Dalio saying, the 2 negative quarters, by definition, that might be the safest play, because we've seen that before, and we've seen how we've recovered from that before. It could be short, maybe it's extended, but we've seen that before. He's saying that potentially there's something worse ahead, which is a new economic world order, which is kind of what we've been alluding to in a smaller sense, where it's like the rising power challenging the emerging power, or the existing power, when we kind of know who plays in those roles, versus the value of money, versus internal conflict, versus international conflict, all happening at the same time, which is dangerous.
Incredibly. And for my traders, how Trump is changing his plan day to day, that's how a lot of you are trading right now. Please know what your targets are going into this market, regardless of what he does. So I've always stressed, you need one short target to be able to get cash flow, one long target to help change your life. Second thing I do want to stress, despite how much volatility we have in the market given because of leadership, it's going to be one of the greatest buying opportunities of this decade. I do not want you to forget that point. It felt like this in 2015. It felt like this during Brexit. It felt like the pain was never going to stop. But even in a recession, on average, it lasts 17 to 19 months. For those of you who are locked in, if you can buy and hold long term, in 3 or 4 years, you are going to be elated. And we'll talk about it later. There are some companies that are dominating. Netflix, one of them. Netflix has moved up my respect level a lot. Visa is what most financial services companies should be. There's still quality out here, despite the BS that's going on with his decision making. So
yeah, quality. I mean, business is still happening, especially when we kind of led with it. But you see the amount of money that's being allocated toward AI development, even in the midst of all this, right? It's the reason why they all met with him and they continue to meet with him. Is yes, part of it is his thought is we've been unfairly treated when it comes to tariffs, but the other part of it is onshore manufacturing. And based on a lot of what especially the Max 7, they're making a commitment to make sure that at least some of the manufacturing is onshore.
Is it too late?
For a company like Apple, that's going to be tough. For a company like Nvidia, not too late. Because they've already, if you looked at the manufacturing, I know that, and you kind of alluded to it to start the show, but that 500 billion over the course of 4 years, obviously that makes it 125 billion per year toward data center development. That manufacturing is going to start producing its newer products. So Hopper is still being produced in Taiwan and maybe some of Blackwell, but at this point going forward, and we've seen the rollout till 2027, Blackwell, Rubin, and I forget the name of the 2027 product. Majority of those will probably be manufactured here based on this announcement that they had today.
Yeah. Is the bond market ever going to recover? We got it. Like, we asked what was the peak of America last week. Great feedback. The bond market has been in trouble since 2020.
Yeah, this is a case of assets over liabilities, and I think when Dalio was speaking, he kind of broke that down. It's right. Somebody's loan is going to be another that debt, right? Yep. Somebody has to pay that debt, and we've been relying pretty much on those bonds because people believe that the U.S. will always pay its debts until the debt amount is becoming almost insurmountable. How do you get from under that? Which is kind of the reason that he's looking at ways to say, how do we reduce the deficit? This is why you get a Doge. This is why you get these tariffs. And who knows what else is coming? Is it in shambles? Will it recover? We better hope.
The last time the bond market 10-year treasury was at this level, not to alarm anyone, was 2007. Right. And if you have a person in office that may elude his debts sometimes to then file bankruptcy, it's not an indictment upon him. I'm just going to macro leadership. If they don't get this Doge thing right, and I keep stressing debt to GDP ratio, that's just getting higher and higher every day.
It's at 7%. 7%. They said the goal is to get it down to 3%. Keep an eye on that. Keep an eye on that.
Yeah.
We'll see. But okay, so
that was a lot.
Nvidia has committed to $500 billion in U.S. manufacturing. So is this a sign that Trump's tariffs are actually working? And how will that affect Nvidia?
Once again, I want to say the idea that he has with the tariffs is right. The execution is poor. So it's like a team that looks great on paper, like the Lakers with Shaq and Gary Payton and Karl Malone. On paper, fantastic. And actual playoff execution is kind of tough. What I do love, though, is that Nvidia is stepping up for this decade to be the company that represents America, like how Apple did last decade. The great thing about Nvidia as well, their profit margin is high. So when I've stressed to invest in companies with high profit margin any companies that had a 5 to 8% profit margin, the tariffs is tearing that business model apart. So do I think this will benefit them long term? Yes. But going back to American exceptionalism, there are not a lot of companies that represent that in America. I think it's a beacon of hope. And it's our brightest company right now in the United States of America. Will it drive the price up of the stock solely based off that? Not solely as a reason, but it definitely will be a catalyst for sure.
Yeah, the profit margin.
The tax breaks are going to be incredible as a result.
Their profit margin is at 55%, which is insane.
Incredible for a multi-trillion-dollar company. Incredible.
It's ridiculous. Is it working? I think the idea of onshoring manufacturing, when you have all these companies and the commitments that they made, I'll run them down. Nvidia, $500 billion, Apple, $500 billion, Amazon, $100 million this year, TSM, $100 billion, not $100 million, Amazon, $100 billion this year, TSM, $100 billion this year, Microsoft, $80 billion this year, Meta, $65 billion this year. Those are the commitments for 2025. That tells you that there is something happening inside of the AI space, and there's been a commitment. And all those CEOs, pretty much outside, maybe TSM, have sat down with the president, and I'm sure that was part of the conversation. But those plants, getting them up, are the most important thing. In fact, Jensen said that they plan to mass produce their supercomputers within 12 to 15 months. But this time next year, they should be up and running and manufacture. Obviously, they don't manufacture their chips. TSM does. And this is the reason why for the past 4 years, we've been saying TSM. Watch what they're doing in Arizona. Look at the commitment that they're making. I know Nvidia is having their plants, some of their data centers being built in Texas. I mean, makes a lot of sense. The land, the temperature, and obviously no state tax doesn't hurt at all. It helps actually a lot. Seeing the future advancement of AI and their chips happening here is a huge lift, but it also says something about the geopolitical tension of what could have happened if something happened to TSM. That reliance on having that offshore is slowly dwindling. So is it working? Short term, the execution of it terrible. Long term, if they're able to get these data centers up and running to a high level of efficiency, it'll make sense.
If I pledge $65 billion and I got to go to another hearing, I'm calling Nancy Pelosi. I know a couple of years ago I was on Mark. Mark, he bought a house and now he got to buy a house in Mar-a-Lago. Like, come on, man. Do we want exceptionalism in our companies or no?
They gave him 3 years off. At one point he was in front of Congress every 3 months, and November 20, the stock took a huge hit. And we talk about Meta and Mark Zuckerberg. Their court case started today. They're potentially trying to break up Meta. Almost
for
saying,
what?
That's the
Well, that just goes to show you when you try hard, that's when you die hard. And
hey, that's a great point.
When he was somebody that had issues with Trump before, and did everything he did to make a peace treaty, gave $1 million, moved to DC. Was that UFC?
Waved the American flag.
The whole thing. And it didn't seem to help out in his case, still got jammed up at the end. So we'll see how this plays out. But I think it's about WhatsApp and Instagram.
They're trying to break it up, make them separate companies.
Yeah. So yeah, sometimes in life you kiss the ring and you still get punished. So take that how you want.
It's not profitable to make enemies, yo. You got to think about this long term.
Take that how you want.
They said that they haven't seen a potential corporate breakup like this since AT&T's telephone monopoly 40 years ago. Yep. For the youngins, there was they
My Bell
Atlantic.
Man,
remember that?
It's not good, man. I tell you what, that's not good. That's not good news for Meta for sure. But
I think they'll make it through. But yeah, I wouldn't want to have to go through this every quarter. It feels like just when you thought you was clear, I'll come back to court, my boy.
That's a fact. That's a fact, and that's why once again it's advisable to invest in ETFs. because anything can happen with an individual company, even the strongest companies. You might have problems with the government.
Yeah, I mean, think about it. So the government is saying that Meta, and tell me the company that hasn't done this. Amazon's probably guilty of this as well. Allegedly, the buy and bury strategy, which is, you buy up your competitors or anybody that you seem as a threat, and have all the businesses under your umbrella.
That's the purpose of a parent company. And we can argue when they paid that $1 billion for Instagram, no other tech company wanted to pay that for that company.
Yeah.
Like that was record breaking at that time to pay $1 billion for a start. It was 15 employees.
Yeah, they were laughed at. There's this Jon Stewart clip where he's actually, he's a comedian,
absolutely
mocking him for paying $1 billion for a picture app, right? And now they're using that text saying, there's allegedly a text message thread between Mark and some of the execs saying that, hey, we got to buy this competitor because it could be a threat to our Facebook. And they did $1 billion. Now that I think what's the valuation for over 100 billion?
And Instagram was not profitable at that time. Shout out to Mikhail, shout out to Kevin System. Like that, it wasn't a money-making machine how people want to have like revisionist history on. It was losing money. That's part of the reason why they sold.
When the guy got the cover of Forbes, and they was like, Instagram has never made money. Like what makes it space? He's like, that's not true. We have made money. It's like, when have you made money? He's like, we made $1 billion. We made $1 billion.
For sure.
So that's one of the greatest acquisitions in world history.
And they got blocked from buying what?
TikTok.
Well, 2 years later, after they bought Instagram, they bought WhatsApp for $19 billion.
And if they can't buy it, then they just copy. They did it with Vine. They didn't buy Vine, but they literally
all forgot about Vine.
Because remember, Vine used to have the 8-second videos, 7-second videos. Then Instagram comes out with 10-second videos. Snapchat, the filters, the stories, all that comes from Snapchat.
Snap is still there.
It's early.
But that's part of the case is that how many people can now compete in the social media realm if Facebook owns Instagram, what's it like?
TikTok.
That's the government. That's the government's, and that is a foreign entity.
Snap
that's the government's case. Yeah, they're still here. They didn't ban it. Vine, doesn't even exist.
Espiritu Santo. What's up with?
So hit the like button and share. We're gonna do something that we haven't done in a while because obviously the stock market has been crashing, and it's a lot of uncertainty. So people's portfolios are down, but even more so is trading portfolios, options specifically. So people are very antsy, have questions, and they're nervous for not just stocks, but for options. So we're going to do a presentation.
Oh, yeah.
You got a president?
Oh, yeah, every day you guys got to cook up a little bit, right? When in times of uncertainty, you got to cook up a little meal.
All right, so let's get into it.
Let's do it. All right, let's do this. I appreciate everybody staying low and firing because that's what you got to do in these environments, man. You don't panic. We understand the ebbs and flows of the game, and we understand that there's an opportune time to make some really, really good decisions that are going to benefit us in the future. And so this is the Tariff Reset Edition, man. Shout out to everybody in EYL University. Shout out to everybody that's here on Market Mondays. Get your pad, get your pens, get ready. We about to dive into this situation. All right, here we go. All right, so let's go with the plan, man. I always tell people stick to the script, but if you've never been here before, then you may not have the script. And so sticking to the script is vitally important. So here's how the script goes for trading options in these type of environments, right? When we see large pullbacks, where we saw large drawbacks and pull downs and corrections and bear markets, some of the companies hit, we want to stay patient, but we want to have a plan. So the first thing is we got to look, has the stock price fallen? Obviously, in this environment, most of the companies that we talk about, if not all of them, have fallen. That's important, right? Especially we want to find good buying opportunities. We want to make sure that they've pulled back to a certain threshold. So that's the first question. And obviously it's going to be yes in this environment, but have the call option prices fallen as well. So they kind of run hand in hand. When you see an equity price pulled down, you're going to see its call option pulled down as well. And the percentages vary. So you got to make sure that you're watching those bid and the asks are very important in these environments to make sure that you have the right play so you can have the most appreciation on the return. All right. So remember, always look for depreciating ask and bid. That's important. All right. So that's rule number 2. Here's number 3. Use time as your strategy. Please, a lot of people hear me say this. They watch me do it in our classes, and then they go off and deviate and do their own thing. I'm telling you this for a reason, because we can't control certain economic factors, right? We can't control a guy in the White House deciding that he's going to raise tariffs, and then he's going to suspend tariffs, and then he's going to make sectorial tariffs. And every day is something new, and we can't predict that. And so rather than trying to figure out a short-term nice appreciation, let's use time as one of the best variables in our favor, right? And so I always tell people to extend their calls out as further as they can. Now, there are some drawbacks to that, right? The prices for some of the calls that go out further are going to be a little bit higher, which is true, right? And you could make a lot of money from the short-term calls, but volatility, right? When we saw the VIX shoot up to 50 last week, when we see it's hovering over 40 and just over 35 at one point today, these are the reasons why we want to make sure that we have time as a variable that can help us, right? So if we pull down 10, 15, sometimes 20, 30%, there's still time for us to get that back, right? We've seen that happen with a bunch of the companies that we've invested in, whether it's Nvidia, whether it's Microsoft, Apple. We watched Tesla do it at least 2 or 3 times since we started the show. And so using time as a strategy is always something I highly suggest. All right, so the next thing, what is the depreciation threshold, right? And so if you're looking at an equity or company, what is the number you expected or you want it to fall to? I know sometimes we call out prices, and Ian's great at this. He's the master at this. He calls out a price, and it might be 40% from where it's at now, and you're like, there's no way it's getting back there. Well, guess what? It's back there, right? And you didn't have a plan, so you didn't execute. And so I put my threshold specifically when it's a stock. I want to see a 20 to 30% depreciation. I want to see it fall, right? And so that goes back from a correction to almost in bear territory. Now, it sounds like that never happens. But if we look at a company like Nvidia, which we talk about all the time, at one point, Nvidia was down 27%, right? We saw Tesla down over 40%, right? So these companies do pull back, and especially with economic downturn, these things happen, and we have no control over it, right? So if the stock falls that far, how far do we want the actual option call to fall? And so I gauge that based on the stock. So if my threshold percentage is 20 to 30 for the stock, I want my option to be 30 to 40, right? I highlighted it. That's the teacher in me, right? I got to highlight it so people can see it, because some people are going to be listening, some people watching. Make sure that you have a threshold that you're willing to stick to, because that's going to help you, right? The last thing is keep reserves, right? You got to have reserves for opportunities when they present themselves. Certainly over the past 3 months, we've seen that, hey, if we're starting, if we've, looked at our percentage thresholds and we've taken profit and we left 100, we took 100% out when our number passed the threshold of what our gains were, we've had money on the sideline waiting for moments like this to actually implement new strategies to make sure that we make more money, so that money doubles. And that's important, right? It's good to see the money, but greed is a real thing. And sometimes just watching the money, sometimes we don't know what to do. It's like, wait, this thing went to 1,000%. Maybe it can go to 1,100%. Maybe it can go to 1,200. Not realizing that, hey, it's not realized until we sell the position, right? So we want to make sure that we have realized gains. Sometimes watching unrealized gains, watching it appreciate is great. And then when it depreciates, it's like, oh my gosh, I should have sold. But these are the things you learn in a space. That's why I always tell people, put your seatbelts on, right? You never want to sell off when it's at a slow. You want to be patient enough to watch it appreciate again. That's why I said use time as a strategy. Let's keep cooking. All right, so what are we looking for when we're doing these option trades? This goes without saying. There's always going to be catalyst events, and I always talk about uncertainty being the number one catalyst event in this economic times. Yes, there's no way to predict where we're going to move when there's uncertainty, but there's some things that we can see that are going to be pretty consistent. Number one here is earnings call. And as you can see, TSM, a company that I'm huge on, I always talk about TSM and how it's important. They have their earnings call this week. ASML, another one in that supply chain for semiconductors, has its earnings call this week. And Netflix, a company that we've been big on over the past 3 to 4 months, They will be reporting on Thursday as well. And so this is a big week for the semi space and definitely for Netflix, who I definitely love. And we got a newfound respect for them. They're moving up into that Mag 7 territory for me. And I know Ian loves them as well. So make sure that you have these earnings reports on your alerts so you can see what's happening with these companies. Analyst revisions, those are important. Sometimes you'll see a pullback because the analyst will say, hey, our new price target for a company is less, right? They had their earnings report and their future guidance was off, or they didn't provide future guidance. Sometimes that'll dictate where a price action will move. New product announcement, you'll see those things usually around some of the Mag 7s, but even some of the other companies, some of these mid-cap companies that have a new product that will help the value of the company go up. Example would be kind of like what Apple does every June and every September when they have their calls and they talk about new product releases for the upcoming quarters. Legislative changes. And I mean, this affects every company. And as we see, we're living in this right now. These tariffs and this tariff war between us and predominantly China, but at one point, I mean, over 90 countries were facing tariffs. And so this is part of that uncertainty that we got to kind of live with, but we got to have to navigate it. We have no choice but to try to navigate through it. And then lawsuits, and we saw it today. Zuckerberg's back in front of Congress. They're saying that he's running a monopoly over at Meta, and they're going to try to break it up, and we'll see what happens with that. And so there's a lot of cases that are similar to Meta. We saw this with Google and YouTube, and the list goes on. Microsoft just had one. And so usually these things pan out, they'll pay a fine, and this won't, really affect the company for the most part. But we got to make sure that we pay attention to things like that. And the mergers and acquisitions just kind of went under the rug, but TSM and Intel actually announced one during this tariff war announcements, and it kind of went under the rug. But again, that affects the supply chain economy, especially when we're talking about semiconductors. And the big initiative is to bring onshore manufacturing. And so having TSM here in Arizona is important. Intel obviously is an American company. So that type of merger, what type of products will they be producing? What will be the nanometers on the semiconductors? What will be the wafer size? All these things will be determined from that partnership. And obviously Intel is a huge company that just hasn't been as innovative over the past 5 years. And well, more than 5, I'm being generous, over the past 10 to 15 years. And obviously TSM, Nvidia, all these other semiconductors companies, AMD, have kicked Intel's door down and said we're coming to take over the space. So these are the things that we're looking for. All right, here's some of the companies that we talk about when we talk about have they fallen down to that threshold. And here's some of the percentages year to date. As you can see, we got all the Mag 7s in there. You can see Tesla with that big pullback at 38%. Even Taiwan Semiconductor, a company that I love, is pulled down into bear territory, down 23% year to date. And so these are opportune times. People are always asking, when's the time? What's the time? When you see pullbacks like this and companies that we know are going to be here in the future and definitely going to be vital to the story of the future, which obviously is artificial intelligence, these are opportune times. And so Nvidia down here almost 20%. These are the signals, right? When people are asking when, here's the win, guys. It's here. We've made it. We saw Apple pull back even more than 15%. And then we had that I guess half of an announcement that there will be some type of exemption for computers and iPads and semis, but we'll see what happens there. We got to cross our fingers and just hold our breath to see what the type of announcement is going to be made and how we're going to navigate around it. But the interesting thing is that company down at the bottom, right? Even year to date, with all the tariffs and all the uncertainty, Netflix is actually up 5% year to date, which is pretty interesting, right? When we talk about tariffs, how will they affect a company like Netflix that has a local presence in international spaces, if that makes sense, right? Like, so they go to places and they invest in the local economies. And so tariffs will affect them, but not as much as some of our other mega cap companies. Certainly not to the effect of like a Tesla, who's in the automotive, but in the technology space, and then obviously Microsoft, Nvidia, and Meta as well. So Netflix is a great case and one that we're going to study. EY University, I promise, I probably will try my best not to give it all away tonight because we got some things we got to talk about Thursday. But Netflix is definitely on the radar, and we're going to give a little bit away as to why we love it. let's keep calling. Let's keep cooking. All right. So in times like this, I always say, look, stay low, keep firing. But sometimes we got to go back to the basics. And so it's cool to invest in individual equities, individual companies, but we saw the drawdown. And so I started thinking, like, we've seen this type of environment before, right? 2020, the pandemic hit. March, the market crashes. April this year, the market crashes. And it wasn't about necessarily investing in individual companies. It was about investing in sectors and ETFs and indexes. I'm like, so you know what? In recessionary environments, let's go back to the basics. Let's go back to our table strategy, right? For those who are day ones, they remember the table strategy. It was, hey, build a strong table with ETFs and indexes, and then you can put individual stocks on top of it, right? And so it's important that we do that because, number one, the drawdown is going to be a little bit less, not sometimes a lot, right? When you're dealing with individual equities, but you know, sometimes the upside isn't as great. So rather than an individual company like Nvidia, we can invest in a semiconductor ETF that has the same type of upside depending on the allocation that Nvidia is inside of there. And so a lot of times people will try to take the item off the aisle in the grocery store. You can either invest in the grocery store itself or you can invest in the entire aisle. And that's how we got to kind of look at it. And so when we see environments like this, we want to play safe, right? We want to have safety first. So ETFs and indexes are going to be the legs of our investment strategy. So which ETFs and indexes, right? Don't worry, I got you, right? Because we've seen this happen before, right? I'll come back to that slide. We've seen this happen before. And so here are the ETFs and indexes that I'm looking at right now. And there's a reason for it, right? If we're talking about leading the world in AI and there's a push to bring oil manufacturing back to this economy, and we talked about the investment that all these Mag 7 companies are going to be allocating to that manufacturing and that development, well, we got to invest in that. And so SMH obviously is one of my favorites and has been my favorite for years. It's been in my portfolio for over 7 years now from option standpoint and from having shares in the ETF. And so it's drawn down 17% year to date. And so when we're talking about opportune times, this is an opportune time. You see a drawdown like that, especially with an ETF, which doesn't move with the same amount of volatility as individual equity. You got to like it at these numbers. And so I did you the favor, right? You can go inside the holdings and see what the top 10 holdings are, but I put the top 3 holdings here so you can see what's inside there. And so we're talking about Nvidia as a number 1 allocation, TSM is number 2, and Broadcom has moved up to number 3. And I said moved up because that wasn't always the case. As Broadcom has performed and that stock has grown and the use case for, Broadcom services has improved, the allocation for Broadcom has become greater inside of SMH. And so those are 3 companies definitely that are in the portfolio. But if I don't want to have exposure to them individually, I can invest into a semiconductor ETF like SMH and have exposure. And so SMH is definitely one. XLK for sure when we're talking about technology. And I could have put QQQ, which kind of tracks similar. But we know technology is pretty much all of the economy, right? They say it's 40%, but we know that every company, if they don't have technology as part of their portfolio, they won't be here much longer. And so there goes the top 4 inside of their ETF: Apple, Microsoft, Nvidia, and Broadcom. Again, you're going to start to see a similar theme, right? Why? Because they know that these are the growth companies that scale and have large appreciation, right? These are mega cap companies. A couple of them are multi-trillion-dollar companies. And so they're going to lead a lot of these ETFs. And so you've seen Nvidia twice already in the first 2. Communication services. Now, this is a new one, right? This is a new one for me in the portfolio. And the reason why is because I wanted to have exposure to that number 3 company inside of that ETF. And so XLC is in the Spider Fund, right? And so you see XLK, that's another Spider Fund. The K is the technology sector fund. The communication services is the C. So its top 3 are Meta, Google, and Netflix. Obviously, Meta and Google inside the Mag 7. Netflix is that new up-and-comer inside of this ETF that's performing really well. And so you see the drawdown in that ETF isn't as large as the others, even down to the VOO, which I know is part of the 2 Tech 2 index. That's drawn down 7.5%. But if you look at the communication services ETF, XLC, is drawn down 5%, and largely because of the performance that Netflix has had. And so having exposure to Netflix was key inside the portfolio. And so I said, look, let me find some of the best ETFs that have large allocations for it. So it's top 3 in XLC. We'll move down to XLY, which is always in the portfolio because of the leader inside the portfolio, which is Amazon, always my favorite. Tesla's in there, has had a large drawdown. And the third is Home Depot. Home Depot is a solid company. When you look at the others, it just feels like, oh man, the tech. Home Depot is a solid one. Like I said, consumer spending is very crucial inside this ETF. And so it hasn't performed as well as it has in the past. But we got to keep it in the portfolio just because of the allocation that it has for Amazon and obviously Tesla, which is a growth stock, which we're not giving up on just yet because that tech component. We understand who is the leader of that company, the CEO of that company, and we've seen when he's not paying attention to the company, the ramification that it has. Even now with the vehicles, there's talks of Cybertruck, underperforming, and they're not even allowing refunds, or they're not even allowing them to be sold back. So there's some issues over at Tesla. But one thing that we do know is that Elon has a history of figuring this thing out, and so we're gonna keep that one close. Another one that we added to the portfolio as on the watch list is FDN, and this is the First Trust Dow Jones Internet ETF. Again, I wanted large allocations to Netflix. If I wasn't going to invest in it directly, I wanted to have ETFs that had large exposures. And so FDN, which doesn't move at the same level of XLC because the amount of volume that goes into those two ETFs. But the allocation is the largest that you're going to find. I believe it's 9% of the fund is Netflix. Again, Amazon is there, Meta is there, and then Salesforce, a company I always talk about that Ian loves to hate on. But when we talk to large enterprise companies who they're using for their CRM, Salesforce always comes up. And so that's a company that we have to respect and pay attention to here in the next couple of years. All right, let's keep rolling. Let's keep cooking. All right, so here's what SMH looks like right now. So people are like, should I put SMH? Well, I've done the work for you. Here is its actual chart, and I have its EMAs here, and those are my Bollinger Bands, and we've talked about that in EYLU. If you didn't, go check last week's class. All my mastermind people, you already know what it is. All right, so the EMAs, the 50-day is at 226, right? So that's the exponential moving average. So that's the average that it's been over the past 50 days. 72 days is at 234. Its 100-day moving average is 236. Its 200-day moving average is actually 241. And the 400, which I don't know why it got cut off, but it's 218, right? And so if we look at where SMH is trading currently, it's at, 202, 203. And so it's well below all of its moving averages, which tells you that it's getting to a point now that when we're trying to figure out when should we buy, when should we get involved, it's hitting those metrics, right? So it's peeled under its 400 moving day. So that's very interesting. Those are one of those telltale signs, like, you know what, the bottom, if it hasn't come already, it's near. And you can see that it actually fell below that 178, which is well below its 400. So we might have hit a bottom here. We got to keep a close eye on that. All right. So once I see that it's under its 200, its 400-day moving average, it's pulled back 17%, which is almost in that 20% threshold. Then I go look to my options charts, and I circled it in red. And I want you to pay attention to that. Look at the time that I'm looking at. I'm not looking at September of 25. I'm not looking at June of 25. I'm not looking at December of 25. Once those option charts go out to 26, 27, that's why I'm interested. I want to have leaps. I want to give myself time. And so I'm here circling at the December 18th of 2026, which is next December. And then I could go all the way out to December 17th of 2027, which would be 2 years from now, which I might do, just because I want to give myself time, and I want to obviously everything to settle from the economic downturn that we're going through now, especially with tariffs. And so this is what I go out to, guys. Like, I'm looking out 2 years in advance, and I'm staying close to the money. So that first circle in red is the months and the time. Then we have the black circle here where I'm looking at near the money. So everything in blue, we've passed that price, right? So that's in the money. I'm near the money at 220. But even at 220, why did I circle that price? Is because, again, when I looked at the 50-day, when I looked at the 100-day, the 72, the 200, and the 400, 220 is pretty much below all those. 218 was the 400-day moving average. 220 is that price right there. So I'm almost looking to myself like, technically, I'm in the money. Why did I circle that? Again, you look at the volume there, right? There's an interest of nearly 2,000 people have open interest in it, and the volume. So these contracts have been purchased, right? Or they're in the process of being purchased. So why would people be out to December 26th and buying contracts at that level? Well, they're thinking the same thing I'm thinking. We're going to wait this thing out. We're going to give ourselves time. We're going to buy in or near the money, and we're going to watch this appreciate over time. If semiconductors are going to be the core principle of AI, and this is the ETF that has semiconductors, well, we need to be invested in it. So that's why the volume is important and open interest is important. That tells me that people are thinking on the same wavelength. So we're right in the right spot. Now, why did I put this here? Well, when people think leaps, they think, oh, man, that's going to take too long for me to make money. It's going to take too long for me to make money. I can't make money. I got to go short term. Well, you can make money short term, and you can make a lot of money short term, but there's volatility. And when that volatility hits, like we've seen over the past couple of months, it's tough to come back from. And so when I do leaps and we talk about economic downturn, like I said, we saw one in March of 2020. Here's exactly what happened, right? This is my March 2020 investment, right? Actually, I did this in July of 2020. And look at the 2022 return, right? Those same ETFs that I just told you about. Yeah. Well, that's what they netted, right? And those are not just hypothetical like percentages. Those are real percentages and real money. That was one of those option trades that is life changing. And so will they all net 1,500 and 1,300%? No, but if they net 500%, you take it. And we're getting into those territories where some of these ETFs, especially around the semiconductors and technology, have hit a threshold that's like, all right, we've got a buying opportunity here. So you can look on the left where the price paid versus the price asked. And obviously this was a pretty good return. And I'm saying that because this is what leaps can do, right? It's not just the short-term plays that can get you those type of percentages. You can be patient and you can pick your right price points, and you can see some pretty cool returns. And obviously, I ain't got it, so don't ask. Let's keep cooking. All right, so usually I would say let's execute right now. But obviously we watched what happened this weekend. The leader in charge of the country has kind of reversed course. His secretary here was talking about tariffs important on semiconductors yesterday. And so that kind of throws a slight wrench into the game. Doesn't change my belief that semiconductors will lead to space. But when you start talking about special sectorial tariffs, I know they're talking about obviously the semis, but who knows what'll be the next sector that they decide that they're going to choose to add additional tariffs to. And so I'll be interested to see what that percentage is and who it will affect. But then, as we lead up to that, we're definitely going to make some moves here on SMH, obviously, because of the severity of what type of companies they're holding. All right. So we're going to build a table, and then we can invest in the equities. And so we talked about Netflix a lot. Why do we love Netflix? Well, Netflix, again, I call it a big boy heavyweight, and especially in the options game, it's a big boy heavyweight because the price of each contract, but even the shares, right? If you want to buy a share now, it's over almost $1,000. And so most people will say that's too expensive, which is why we told you a couple of ETFs that make sense to have some exposure to it. But here's a couple of reasons why, man. The company is the number one streamer in almost every market where it competes, and it's going to be hard to replace it with local alternatives. Like I said, Netflix actually goes into spaces and invests in local economies, which makes it very unique in that way. So to even try to hit it with tariffs kind of doesn't really pay off because they'll just hike up the price. And when you hike up price, that really goes to the local consumer, which is happening pretty much with all other things that are getting tariffs. But, we got to be mindful of that with Netflix. Their strategic partnerships. We talked about the WWE, obviously the NFL when they did halftimes this year with Beyonce and having the Super Bowl, or not Super Bowl, having Christmas Day games. They've already signed on for a couple more NFL Christmas Day games for the next season. I could see them starting to get into the playoff realm at some point. Obviously, we saw Amazon Prime do that. So that's going to be interesting. And then the UFC potentially. Endeavor obviously owns WWE and UFC, and so seeing them leave ESPN at some point in their future and go into Netflix sounds like something that definitely could take place. And also, you start going to these UFC events or watching them, and you start looking who's in the crowd. More and more, there's more politicians that are showing up to this, and so I'm interested to see what happens here with UFC in the next couple of weeks. Other part is economic downturns, the ones like we're in. If we continue this, inexpensive entertainment has always, and it's said traditionally, but always has survived and flourished, right? People will cut back on spending, right? And most times they'll stay home. And if they're staying home, most people don't have linear TV anymore. And so Netflix and chill becomes a real thing, not just a way of life. It becomes life. So going out to sporting events and going out to concerts, that might cut back. And so you see companies like Live Nation may be affected by that, but people will keep their Netflix accounts. And then Netflix, they've already spent significant amount of money in local economies. From 20 to 2023, they invested nearly $7 billion in Europe. And so they have the exposure to a global landscape. Obviously, we always talk about what they can do in other economies. Africa is huge, and more billionaires are talking about the investment inside of Africa from a content standpoint, but from a workforce standpoint and an infrastructure and opportunity standpoint. Netflix has a global outreach and it has a global vision for its company. So, that is always going to work in their benefit. And here's their chart. And so, I loved it when it hit its 200-day over there at 814. Would have been great to grab some contracts there. But this thing was moving so fast. Sometimes it's tough to catch it. And so we'll see if it pulls back here. They got their earnings report on Thursday. I'm expecting it to, probably push up a little bit, if not, stay steady, just because of the quarter that it had. And obviously the tariff situation has happened in the second quarter of this year. So we'll be mindful of that. But grabbing shares at this 900 mark, or like I said, if we got it at 814, that'd have been great. But anywhere between 860 to 880, I would like to start grabbing some option contracts because it is a big boy heavyweight. And when I say big boy heavyweight, this is what I mean. Yeah. Now, I told you I go out to 27 from some of these other companies. This is out to 2026. This is next January. And when I say big boy heavyweight, I'm talking about the price per contract. And so if you can see in that bid and ask category, we're talking thousands. Right, we're not talking $100. We're not talking $1,000. We're talking $11,000 here at the 980 call. We're talking about 13 to 14,000 between 930 and 940. So it's a big boy heavyweight. So if you're investing in Netflix from an option standpoint, this is something that you better make sure that you have some discretionary income, that you have some revenue on the side, that you have some reserves on the side before you do it, because it's a big boy heavyweight. So grabbing 2 or 3 contracts here is something that you got to be very, very calculated about. But it's a company that we do believe in. And so I'm going to stop there because we got so much more show to go. But tune in this Thursday. We're going to be going over this and so many more option calls and companies that we've been looking at. CoreWeave will definitely be inside of the class because there's some things that we saw at GTC that I saved. Not that I didn't give the market money audience. I just saved for EYLU. So make sure y'all tune in. We cooking up, y'all. Love is love.
Okay. So there you have
Chef
it.
Up.
There you have it.
Shout out to Netflix.
Come on, man.
We're gonna forgive you for Pop the Balloon. We're gonna that. Can we put that in the show notes for Wednesday?
Even white people was mad at that. They're like, yo, y'all took this gentrification too far.
The reverse gentrification.
Oh. Come on.
So here's the thing. Okay, so when I started my career as a financial advisor, I started in 2008, really, during the Great Recession. So I understand this thing from 2 different levels. I understand opportunities
For sure.
that happen when the stock market crashes, but I also understand mistakes that can be generational, like people liquidating their 401k, people losing 97% on their portfolio. Like a lot of these people still never really got back to that marker. So in times of uncertainty, education is more important than anything. So I say that to say, like, a lot of people do options, but a lot of people are not responsible in their teaching. And a lot of people don't have the same level of results. So like that's why
Hello.
I think as far as like the leap options and stuff like that, like you got to be in a situation where you're as safe as possible, right? Because it's a high risk situation. Nothing is guaranteed, but you want to have the most comfort as far as security as possible. That's why you stretch it out longer as opposed to doing daily options, weekly options, things of that nature. So you got to you should always focus, but when the market is down, you got to quadruple focus because that's the opportunity to actually really make real gains, right? So I say that to say, I mean, as far as dollar cost averaging into investing, you should always be doing that. But if you have something in your on your watch list, you might want to put more money in. And for trading, this is not the time to just be playing around with trading. If you are trying to be a trader, if you're trying to trade options, you need a set strategy. You need
that you don't deviate from.
Right. Vision, a community, support. This is more important now than ever. Like I said, on the one side of it, if you make the right trade, it can change your life.
Amen.
That just one. It's like baseball. Like you could strike out. You could strike out 9 times. If you hit one home run, that might win the pennant, right? So one trade can change your life.
Yep.
But you got to get that one trade. That's important. So, options is something that I know Troy's been doing, and he's like dedicated most of his time, like, every day he's been researching and learning and doing different things in the EY University. That's one of the main jewels inside of EY University is like he has a class this Thursday. He'll talk about every month they do monthly options classes. And you need that level of guidance. Like I said, even if you're down, if you got time, you can wait it out. But if you don't have time, then you're just going to be truly screwed. So, in my opinion, the option boot camps that we do at EY University and the community that's been cultivated around the trading for the options is unparalleled to anything else that I've seen online. That's just a fact. That's just my opinion, but that's also my non-biased fact in this situation as well. So with that being said, if you know anything about EY University, you know that Ian's been demanding that we raise the price on this for a long time.
Forever.
And we raised the price in 2025 because less is more, but you also got to value your product at a certain point in time. Tumultuous times that we're in. Very, very rocky waters. Troy's options class this Thursday might be the most important class that he's ever taught. I'm just saying that now.
And we're treating it as
being the economic environment that we're in, being the uncertainty, being the forecast for the future. This might be the most important option class ever. This might be the most important option class ever. If you're in EY University, you cannot afford to miss it. If you're not in EY University, 48-hour window to join EY University. 50% off, half off. EYLUniversity.com. Enter code Market Mondays. One word, Market Mondays at checkout. This will grant you not only access to the options class, but the whole thing. We have two real estate blueprints that MG put together as far as walks you through how to buy a home and walks you through the rebuilding process of a home. We have weekly calls on almost a variety of different topics. We have stuff that we had in the past, from taxes to credit, you name it. I do a monthly financial planning call. We have different regional chapters. Like, it's built like an actual physical university. We do meetups. This, man, I'm telling you, like everything, and it's very, very well run. Extremely efficient app. Magda, she's incredible. Emails, all this stuff. If you're serious about hitting that pitch out the park, having a community, really understanding long-term trading options for leaps, vitally important now more than ever. Go to EYLUniversity.com, enter code Market Mondays, one word, 50% off, 48 hours only. This is probably the only sale that we're going to do this year.
Thank God.
The most important time to do it.
Yeah. This is where wealth is going to be built. And not only do you get access to this Thursday's class, but you get access to every class that we've done for the past year and a half, which has been pretty impressive. But like you said, this one is super important because the market has set a reset. And we've seen conditions like this before, and we executed at a high level, and it changed a lot of people's lives.
Yeah.
And so I would use your word, it would behoove you to be there this Thursday at 7 because we're cooking up. And have your notepads ready, have your questions ready, but most importantly, be ready to execute come Friday because we're cooking up.
Yeah.
Please learn at a high level. I know some of y'all want to trade hourly options.
Please don't.
I'm out. Please don't.
Please don't.
Please don't. And it's actually a perfect way to stagger because if you have your long-term portfolio, then you have your leaps, you're making money regardless. Like for those of you who got leaps a year ago, you're not as concerned about what's happening right now. Shout out to all the traders who've been following their plan and they're up in this market.
And it's how far you're out too. So like me specifically, I have 3 Nvidia options. I have one that was expiring this year, and then 2 expiring in 2027. I'm down on the ones I'm down right now on the ones from 2027. I was up 350% on the one that expired this year. So you know what?
Yeah.
I just thought about it. I'm like, you know what? Sometimes in life you can't be greedy. You're up 350, almost 400%. So I sold that one, right? So now it's like one or two things happen. If Nvidia really starts to rally, well, some people, that 350 could have went to 700 potentially. But I also have 2 other ones that I already have. So I'm going to make money. If it does rally, like I said, you can't be greedy in life. If it does rally, then I'm already positioned with 2 other long terms. But I'm also not too concerned about this year because even if this year doesn't work out, I essentially have another 18 months after this year for it to go up. So am I bullish on Nvidia in the course of a 3-year time frame, 36 months? The odds are in my favor. Like I said, anything can happen, but you got to put yourself in positions to win, and you got to have odds that's in your favor.
Yeah, that's why you got to have a strategy. You got to have a plan. Even having multiple contracts, right? So once you get to that percentage threshold, you're shaving off some contracts. You're letting the profit run. But like you said, we putting these leaps out. The leaps that I'm looking at now, like I got this one here for December of this year. It's with everything that's happened in the market, right, including today, it's still up 430%. Right? With everything that's happened with the deep sea
easy bucket,
right?
Yep.
With tariffs, we're still up 430%. I got another Nvidia that expires January of 26. That's up 170%. Like with everything that's happened, present day, like these are current stats. And that's why we go further out. So like you said, 2027, as soon as those tariffs came in, I'm looking out to December of 27. Great. And what am I doing? I'm playing close to the money. Or like I showed people at the mastermind, there's another strategy that we use that the most successful people use. So yeah, these are part of the things that we're gonna learn and execute and implement into our plans.
And the thing about it is don't be greedy. Okay. Don't be greedy. Don't be greedy and don't go away from the strategy of top companies.
For sure.
Yeah.
At discounted prices, long-term holds. It's the same thing with real estate. This is real estate on the stock market. We're looking to buy in the best neighborhood. We met another person from Detroit. He told us something that you want to go to the best.
Hey, shout to y'all, y'all legendary. Woo, baby.
You want to go to the best neighborhoods.
Facts.
Because nobody's ever thinking that something's bad's gonna happen in the best neighborhoods, right?
Mm-hmm.
You go to the projects, and there's a high probability that you're going to get yourself in trouble.
A lot of trouble.
Go to the best neighborhoods.
Mm-hmm.
Find the cheapest house on the best block,
and wait for the value to go up.
Value gonna go up.
That's it. Rehab it, wait and hold. Ask MG. That'll be the strategy, right? Like it's a very good chance that if you buy a condo in Chelsea, it's going to quadruple in the next 20, 30 years. That's a very good chance that's going to happen. Yeah. So don't go too far. Don't go too far off of. Shout out to my guy, Wayne Penn. we grew up together. So he asked me about this stock, ATOM. And so I never really looked into it, but it's in the semiconductor space.
Mm-hmm.
If you're looking in the semiconductor space, you gotta look at Nvidia or TSM because they're already discounted. They're already discounted
right now.
Right?
Yep. Right now. Listen, those two companies, and we were talking before we started this session of Market Mondays, but like, yo, those are the two most important in terms of in the AI space. Like, the manufacturer
and in the country,
and the number one person that's going to lead inside of the semiconductor space, especially when it comes to artificial intelligence, machine learning, Nvidia, right? Who manufactures for them? TSM.
Yeah.
Who is allocating billions of dollars to development inside of this country? Both of them. Stay there.
For sure.
There's some other ones.
I know that ATOM is cheaper, but it's like basketball. Like the best players get the highest amount of salary per year. There's a reason why this one is at $397. I know the thought is, what if it goes to $15 because all the value's been knocked out of Nvidia, quote unquote. But they have some monsters there. Like AMD could buy them right now and not blink an eye.
Yeah,
and invest in the best quality.
And Wayne, he'll probably understand this even more. Like the NFL draft is coming up, right? And so they always do comparisons. They're like, yo, Cam Ward's gonna go number one. What's his comparison in the NFL at his peak? He's like, he has Mahomes tendencies. We're like, well, Mahomes, like this is somebody who's done things that nobody's ever done in football, right? Yeah. Somebody who could potentially be the greatest. Not saying that Cam Ward can't potentially do that, but you'll never hear somebody say like, his comparison is Blake Bortles, right? It's Jamarcus Russell, right? Like, everybody's not going to be the greatest player of all time. You already have the greatest company in the history of the semiconductor space right now.
Today.
That is thriving and has potential to continue to have a run over the next 5 to at least 7 years because they're so far advanced. Go with them.
That's a fact.
And once again, their all-time high was back in 2021 when the chip space is hotter than ever. If you made your most recent high 4 years ago, can't do it.
I got about 10 that I would put before that.
Can't do it. So
easily.
Shoot me a text.
So
I'll list 10 that are better than that one.
For AMD, TSM, Micron. Hell, I'll put Intel. Intel's better.
Qualcomm, Applied Materials.
Yeah, that's a bunch.
Lam Research. Yeah, that's probably 10 right there, bro.
Yeah, can't do it.
Okay. Or I'm surprised you go get an ETF.
ETF.
And go see what the ETF fund has it. Where's that allocation at? Is it even in the top 20?
No.
No, I can't do it.
We're gonna talk about ETFs. So.
All right, before we bring our guest on, another question. My guy Elijah, shout out to Elijah. He's out in Dubai. He said, okay. He said, should I put option puts on a company like LVMH? Being that LVMH right now is down. Luxury brands are down across the board right now. In recessions, people spend even less money. China's going away from them. They having manufacturing problems in America. They said that they can't even make their bags correctly.
They try to pay us to do them $17 an hour.
Is this a time to put a put on LVMH?
One of my more famous quotes is that the market is permanently rigged to stay up. So if I told you hypothetically, on the low, me, Troy, and Rashad owned Dior, Tiffany, Moet, Sephora, and Givenchy, would you want to bet against us long term or would you want to buy? LVMH, it's not talked about it like this, but it is the luxury ETF, luxury index fund. I know it's went down. The time to maybe have expressed that idea would have been in 2023. It's getting to almost a buy opportunity. Like if it gets to maybe 481.46, I like it long term for LVMHF. If you're looking short-sighted, maybe, but everybody in China is exposing how to make a luxury bag. A lot of that is propaganda. Now, is there incredible markup on it? Yes. but I'm not betting against the luxury market and definitely not betting against LVMH, given the powerhouse that they are. And we also have to say too, stop shorting the market and trying to have puts or shorting the futures market when the bottom is almost here. There isn't much room for it to go to the downside, and I don't want you to get hurt long term. So my answer for sure is no.
Yeah, it's tough to do puts when there's uncertainty. I mean, this is so uncharacteristic of any market that I've seen, right? Like,
sure,
2 weeks ago we were down 2,200 points on the Dow, and then 2 days later we were up 2,600 on the Dow, and then the next day we were down 900. So, and especially when people are doing puts, and that's a little bit different than the calls because those are more short term, right? A call I can put out leaps on, but when you're doing puts, you want to make that short term because you know on the other end of the probability is that the market is going to appreciate over time. So you make it short term, you make it 3 to 6 months. Some people will do it 1 month, but even in that 1 month, like something could change, right? Like if he doesn't announce yesterday, if there wasn't an announcement that there was going to be semiconductor tariffs, right? Like there was suspension Saturday, and then if that doesn't happen Sunday, and you had puts on Apple, you'd have been shot,
destroyed.
And there would have been no recovery from that because the market would have been on a run. Now, Wednesday tonight he might say something, and that could change again. So the volatility and the uncertainty around doing short-term investments, especially in calls and puts, it's tough to do in this type of market. But one thing we know that especially America, and this is what the world relies on, is that we're consumers. Even during the pandemic.
Consumption went through the roof. And if he's in New York, it would behoove you. Go to the little Louis store and just try and get lunch. It should look like a zoo in there. I went in there. I said,
reservations till 2027.
Bro, I'm such a big fan of you. I would love to get you in, but come back in 3 weeks. I'm here now. Can I get a coffee now or no?
Not now.
Nah, not now. Nope.
Yeah.
When they're selling chocolates for $90 in a little box, ooh, profit margin crazy. I would not short Louis.
Yeah. We
Versace, which has been misrun for a long time, was just bought for $1.5 billion by Prada.
Yep.
No, now's not the time.
We sat down with the CEO. He said the core 4 or core 5, those are the ones that matter for the company. The other ones, it's cool if they bring up, they do their part, but we need the core 5 to make sure that they're doing it.
Yep.
Shout out to Louis.
Yeah. Better to do a call on Louis for sure.
Yeah.
For sure. Okay. Okay. So Nvidia CEO says that they're weathering the storm for tariffs. So given the landscape, do you believe semiconductors are still the best long-term tech bet in this fractured global economy?
1,000%. 1,000. Okay, this is the equivalent of the assembly line when Ford was out. Like, there is no more important investment. So much so, Apple lied about their intelligence and AI in the commercial. I know HQ, you tired of me talking about it, but until you write the ship, I won't. Sorry. But yes, this is like water to our economy. And I would argue if we didn't have an Nvidia or the semiconductor space, I don't know how bad we would be down in this market. So yes, I don't think anything is better to invest in long term, given like the next 5 or 7 years. Because whoever wins this race is really going to win the global war over the next 50 or 60 years.
So much. This is the race that we have to win. It's the race that we're in the lead in. In every investment that we just said, I'll run the numbers again. Nvidia, 500 billion, Apple, 500 billion, Amazon, 100 billion, TSM, 100 billion, Microsoft, 80 billion, Meta, 65 billion. All those numbers from the Mag 7 and including TSM tell you that this is the space that you have to win. And all the investment in the CapEx spend is showing that we want to win. So if they're investing in it, then chances are you should be too.
Because if we don't get this right, we don't get quantum, then we don't get all the derivative works going.
That's when it's really over.
Yeah.
No, really over.
Yeah.
All right. Well,
where would we be without it?
Without further ado, we'll bring our guest up, our esteemed guest. We can bring. Hey, how's it going?
Hey.
Hey, how you doing?
I'm good. I'm over here like, yeah, semiconductors for life.
That's
I agree.
Hello, thank you.
I agree.
Morgan, somebody that I don't know when we cross paths, but she's been killing it for a very long time. She actually started a company called Blavity, which amplifies voices, media, and she was early on that space, and then changed the game again with Afrotech. Revolutionary idea to actually have the Black community specifically voices amplified in the world of technology, and works with a lot of different corporations and different things of that nature. But she's also best-selling author, a mother, a wife, the whole gambit. So a very accomplished entrepreneur and somebody that has done very, very big things in the world of media and events. So thank you for joining us. Appreciate it.
Yeah, thanks for having me.
So let's get into it. Okay, I want to start with tech. So I finished talking about tech. You have Afrotech, right?
Yeah.
So Afrotech is a convention, right, for people that's interested in technology, people that's in technology, right? Black people.
Mm-hmm.
How do you see this landscape changing as far as artificial intelligence and all of these robotics? How is this changing in real time, and how is that impacting Black people that's in technology and Black people that's trying to get into technology?
Yeah, so Afrotech started 10 years ago. I started my career in Silicon Valley working at Intuit, which is, a company that it has huge monopoly on like TurboTax and so many other products, QuickBooks. And what we've seen over time is that these companies are very good at evolving, and a lot of companies fail, right? Like companies take a shot and then they completely fail because they didn't evolve quick enough. Mm-hmm. The evolution and the speed in which these companies is moving is something we have never seen before. And when it comes to labor and teams and hiring, they are not able to keep up with the pace of hiring that they need to for these technical skills, because a lot of these skills take 10, 15 years to really learn. So there's this huge gap. And the reason Afrotech's been so successful and why people continue to need to get into technology is because there is a large gap in the labor market. I mean, it's one of the reasons we're in this trade wars now, really. And I think for Afrotech, we have about 300 clients. These are corporate tech companies, everyone from your Intel to Lockheed Martin to Nvidia to boring B2B companies that are billion-dollar companies you've never heard of, like F5, run by a Black man, $15 billion plus revenue. Like, it's amazing the impact these companies can have. What's happening is that with AI, they're all trying to figure out what is the disruption in the industry that's going to happen. Mm-hmm. And I think that a lot of times people are getting AI wrong. Like people are like, AI is going to take my job. It's like AI is going to take your industry. So there's not like, it's not like, oh, it's me against the person using AI. No, the whole industry is gone. What do you do when you're playing that game?
Yeah, I think you sit at an interesting seat in this as an event. Such as Afrotech gets to see a lot of the entrepreneurs inside the tech space in terms of innovation. We try to stress to people like we have to take part in this. We have to be part in the innovation. We have to be a part of the engineering. As you start to see businesses that are coming to the event each year, do people really, and I say people, our community specifically, do they understand the severity of what's ahead of us over the next 2 to 5 years if we don't get this right? Because I know we will get it right, but I
think they're trying. I think Afrotech reaches people who have a higher proclivity of being able to say, like, I know that there's something out there that I need to know, and that's why we do events all over the country. We do happy hours all over this country. We got a happy hour tomorrow in Houston, New Orleans. We're trying to bring it to the people, not just have this huge mega thing that happens in Houston, which is in October this year. What I'm seeing is that people know that there's a gap between where they are and where they need to be, but they're not quite sure if they're willing to take the risk to fill that gap. I think it's the same that happens in other industries where people are like, 40, 50 years old, and they know that these kids grew up with technology, and you kind of have to decide, am I going to try to play their game, or am I going to like lean on my leadership skills or my soft skills? That can only take you so far. And that gap is really, really small with the world of AI.
Yeah. For those who may hear a statement, like you said earlier, that the AI is going to take over an industry, what solutions or advice would you give to those who may be a little bit terrified that are in our community?
Oh, you got to get out. I mean, I'm not going to sugarcoat it. You know, it's no different than people who were in the magazine industry and the newspaper industry, and then digital came along. Of course, you're always going to have that, like the stragglers that are going to make it. But, you know, 20, 30, 40, 50 years ago, the most powerful moguls in our country were media moguls. The people who owned the distribution channels and owned the newspapers. Those were the most powerful people in the city. Now, media companies are owned by billionaires as toys, you know? So, and they didn't get rich from the media company. They got rich from technology. So, yeah, I think you can decide to play the game, or the game is going to just keep going, and then you're going to be, you know, stuck. So I really think it's important that our community understands what's at stake with AI. I mean, you guys talk about this all the time, so I know everybody watching this gets it. The question is, like, what actions do you take to get up to speed?
Yeah.
You know?
So what industries, I have a two-part question. What industries do you think is going to be eradicated by AI?
I mean, you guys see all these graphics, all these illustrations. It's over.
It's over.
It's really been over. I mean, that took them what, 4 months?
Yeah,
that's a fact. Graphic
video
design,
editing, gone. I mean, even distribution. I mean, probably even for this show, there was a time when you guys might have had 2-3 people responsible for getting the piece of content here and then scraping it, putting it over here and putting it over here. All that stuff's about to be automated. You know, so even project managers, coordinators, project coordinators, executive assistants, all those kind of like repetitive administrative functions, gone.
And the second part of my question is, okay, what industries do you see as like, this is to get into? Like, could we talk about cybersecurity? That's something that's big, right? That's only going to get bigger. Like, where's the opportunities?
Yeah, it's thinkers. It's people who can do critical thinking. And, you know, I think there was a time when we would pay a lot of money for critical thinkers, right? Like, you're a CEO, a CRO, you're at the top of the food chain. You're paid a lot of money because you have all this expertise and all this domain expertise and all this knowledge. So you're supposed to be paid the highest. That actually, with AI, goes down, because now AI has all this historical knowledge the same way that somebody who was, you know, the leader of a company for 5, 10, 15 years. So knowledge becomes a commodity in a different way, which means that everybody should have access to be a strategic and critical thinker. So what happens when you start to get the everyday person able to process huge amounts of information and make really smart decisions, when before they didn't even have access to that information? I think more people become solopreneurs and more people are trading and bartering. I think that more people will be self-employed for sure. Even things like fractional CFOs or fractional, you know, roles, those things, like all those people who used to be employed to be a legal, in-house legal. In-house legal?
Or CMOs.
Or CMOs. You need
they're in trouble.
Gone. Okay. You need somebody who knows how to work the specific AI product or tool that has that domain expertise built into it to ask that person effective questions and have that AI agent ask effective questions and then give that information back to you.
Morgan, I appreciate your brutal honesty. And
I love the candor.
You're like, she's doomsday. I'm not.
You fit it right in with this audience, right? Like, it's over. Like, we're not playing no games with these people. As you're saying it, I'm wondering, as AI is developing and really coming to the forefront over the last 2 to 3 years, how has it changed your business, right? Because you're in media, right? Like, it feels like you're like saying these things off the head, like, yo, I did that. How much of an impact has it had on you?
Oh, so much. I mean, we talk about it every day. My employees are probably sick of me because we run a training every Thursday, an AI training that anybody at the company can join, where we go through the tools. I get reports every week on who's using AI at the company, who's our highest users. I'm on it. So, you know, to me, I'm like, whether you stay at Blavity forever or you don't, it's my responsibility to, especially as a company that employs mostly Black and brown people, like it's my responsibility to make sure you have the tools to decide to participate or not. I'll give you an example. We used to have probably 100+ writers. We own 5 brands across different industries: travel with Travel Noir, Shadow and Act with entertainment, Afrotech, which is 10x size of traffic than Black enterprise in terms of business news and education. So we had a lot of experts, and it would take people a week to write 5-10 articles. People are now able to get to 5-10 articles in a day because we built an AI tool built on our thousands of libraries of archives with the voice of our brands. Each library has its own voice. And we built a tool on top of that using ChatGPT's API to then allow you to input your information, input all the research you did, put it into the system, and then it pops out an article that's already SEO optimized, keyword optimized, and everything. And the output is like 40% better than if a human wrote it without it being AI supplemented, and faster.
Yeah.
And it's our voice. I think that's important.
Yeah.
In your business, what are like the top 3 or top 5 AI tools or LLMs that you're using in your business?
So we're a Google Suite company, so we use Gemini. I think on a day-to-day, I'm trying to get my team to get more advanced with their prompting. They're using it at a very basic level. So right now, they use it in their email where it'll make suggestions for your emails. They'll use it for summaries of meetings. We use Google Hangouts, so Gemini can be in there for notes. I used to have an EA that just sat in meetings to do notes. We don't need that role. It's gone, right? Like that's gone. So note-taking for everybody. What's interesting is that it's actually really helping with truth. There's no he said, she said anymore. Like what happened in that meeting? No, he said, you can't say Susie said this and DeBaun said this because it was written in every meeting. Right. So the accountability level is also much higher. We use ChatGPT, the enterprise version, because we have a lot of, private information. So everybody has access to that. And then we use Salesforce. So, Salesforce owns Slack. Slack is our digital headquarters. So all of our Salesforce and Slack is integrated. And then we use Asana, which has really good AI tools on top. And then Canva. Canva just changed the game with their drop last week.
Amazing.
So I'm very excited about that.
So, okay, let's talk about this. The rollback of DEI, the rollback of corporate involvement with Black organizations. You are in the crossfires of that because you work with a lot of corporations and you have a Black event, right?
Yeah.
Has that impacted you? What's your thoughts on this? Because a lot of times people just hear this, but it doesn't really matter if it doesn't impact you personally. Yeah. So you, as somebody that's operating at a high level and have a lot of corporate relationships, what's your thoughts on everything that's been happening?
Yeah, our business has over 40 million in revenue. Half of it is Afrotech, half of it is media. So on the media side, revenue is up. Like all these consumer advertisers are completely like capping when it comes to DEI. Like it's very much a political fodder. But when it comes to their bottom line and their top line, you have to invest in Black audiences and consumers. Like we are where growth is. Multicultural is where growth is. They already have the white consumers. So they can't put their foot off the gas and not advertise to us. Now, how they advertise, that shifts slightly. But actually, the tariffs are having a bigger impact on the media business than the D&I executive orders.
Really?
How so?
Yeah, so the D&I executive order was basically saying, like, you can't have preferential treatment. So all the programs and, these big commitments of we're going to spend $100 million on Black-owned media, like they weren't honoring those anyways. So nothing really changed. Like you were already going to spend what you were going to spend with me, regardless of what you said you were going to do. Mm-hmm. So nothing changed on our end. For the tariffs require people to be more risk adverse because they're not quite sure what's going to happen. And Trump is changing his mind constantly. I mean, literally Friday afternoon, like, dude, what are you doing? So when people become unstable, they become more risk adverse. They become slower. They're slower with payment terms. They're slower with, are we going to release this product line? Are we not going to release this product line? Advertising is tied to campaigns and launches. So if things get held up because things are stuck in the ports or whatever, that impacts how much they're willing to spend on advertising those products and services.
That's interesting. I mean, and the other side of it, and we've seen it as well, especially in media, when there's uncertainty, when people are unsure, then they go to trusted sources for news. Have you seen an uptick, obviously, in your space during this? I don't even know, this 100 days post-election, right?
Exactly. Traffic's up. I mean, media companies do well under Trump because he's chaos. You kind of have to stay involved. And because people know they can't trust mainstream media anymore, they're looking for alternative platforms like y'all. I mean, I'm sure your traffic on your YouTube is probably skyrocketing. I saw Roland Martin's
he's good.
numbers.
He's good for business.
He's good for business. He's not good for society, but he is good.
There's the distinction. Thank you for drawing that line.
But I do think, I mean, even Roland Martin, I think, had like 300,000 subscribers in like 90 days. These are crazy numbers, but it's because people are looking for reliable sources of people they trust that they know they're going to get the truth from.
Yeah. I saw that you began investing into the stock market at the age of 13, which I think is amazing. What lessons from investing so early have you taken into your media empire?
Cash is king. The more cash you can sit on, the more you can take advantage when the moment strikes.
Yes.
I've done 3 acquisitions in the last, 5 years of Black-owned businesses. The only reason we've been able to do that is because we had cash waiting for a moment that made sense for us. And then the other thing is, like, when it comes to investing, I've also raised venture funding, which, you guys have talked about quite a bit. So I've raised over $12 million. You got to treat every dollar that you get as your last, and you got to figure out how you're going to flip it. That's the same thing with investing. When you get those moments where you have unreasonable gains, you got to take some chips off the table.
For sure.
Do not get greedy. Okay. And if we had listened to that, we all would be doing really well right now. If we had sold in November, December, being like, this is looking pretty darn good. And now that money would be worth basically 60, 70% more because the stocks are down. So you sold at the high, plus you're getting everything at the low. That's a double win.
So can you walk us through like some of your acquisitions that you made?
Yeah, for sure.
Companies?
Yeah, the first one I bought was Travel Noir. So Travel Noir was an Instagram brand. They had group trips, which was amazing. They did trips in Bahia and Johannesburg and Amalfi Coast with little, grandmas cooking pasta and stuff. And they had no media brand. Well, what we know is that Black travelers have huge discretionary income and are like really growing because millennials and Gen Z, we spend on experiences way more than our parents did. So I was like, all right, how do I build out Blavity in a way where we're off of interest groups, not just being Black, but like what Black people are interested in? And travel is one of them. So we bought Travel Noir. That was like 2017. I talk about it in my book, Rewriting Your Rules. And then the other brand that we bought was Shadow and Act. Same, but for entertainment in Hollywood. Black people watch more TV than any other demographic in the country. And we just love TV. And we love watching TV as an activity with other people, which is different. So that was the second brand we bought. And then 2 years ago, I bought a brand called R&B House Party, which is a traveling party series, so that we could build out Blavity Fest, which is our new festival, which will be in Atlanta at the end of May with 2 Chainz and Kirk Franklin and all types of programming around Black wealth. So just starting out our experiential business on the Blavity side, which is super important for our business.
Yeah, you referenced the book, Rewrite Your Rules. Let's talk about it. You said master yourself, master your method, master your growth. Break that down for us.
Yeah, I'm from St. Louis originally, and nobody really told me the game. What they told me was you work hard, you get a good job, you go to school, the best education you can get, and like it should all work out. And that's just not true. There are so many people watching this where it's like you did all the things. You like had the good job and you did all the things, that you did what was right. And we're watching a system more so today than ever before, where the people who are making the rules, they're making them for all of us to follow, but they're not even following them.
Yeah.
So what do? You have to decide for yourself how you want to interact in that kind of system. So this book is basically a framework to help you figure out, well, if success isn't like do all these things and then you get this golden egg at the end, what is my definition of success? And how do I get there? What is the strategy and the frameworks that I need to have in order to do it? So it really is a workbook and a playbook for people to be able to do that, leveraging all the ups and downs of Blavity and the things that I've done. But more importantly, like whether you're a career 9-to-5er or an entrepreneur, like you can do what you want to do, but you have to define it for yourself.
I think one of the hardest things as an entrepreneur to do is to overcome obstacles, and we've gone through it.
Mm-hmm.
Can you talk to us about how you deal with attacks, obstacles that you may face in a business while you're trying to give back to our community?
Oh, yeah. I mean, we get attacked every day. You guys know. I think that, I go back and forth on this. I mean, I was even watching the comments on Pinky's videos on your guys' channel, and I just talked to Pinky in my book tour stop in St. Louis for Rewriting Your Rules. And I think every time I read the feedback and comments, I really actually have a lot of empathy for our community, because what happens is like there's a lot of pile-on for systems and infrastructures that they don't get. And then I ask myself, well, how are they supposed to know? Like, how are they supposed to know what private equity is versus venture backable companies? How are they supposed to know, like, I have a board, I report to the board. It's not just me, I have shareholders. Like, how are they supposed to know this stuff? That's what gives me the motivation to say, well, it's my responsibility to tell them, right? And it allows me to say, you know what? Maybe we should do a video on how this works. Like, maybe we should have somebody, explain how to become a speaker at Afrotech. Maybe we should have somebody explain what it means to be a venture backable company and why maybe you shouldn't raise venture funding, because you're not actually looking for capital for equity exchange. You just need cash to grow your business. You need a loan or a line of credit. Like, let me actually take these moments as an opportunity to flip it back.
Okay. So being that you have a lot going on, right? Like, you run a company, but you also have two children or one?
I have one and I'm pregnant.
Okay.
Congrats.
Congratulations.
Congrats.
So
that's why my upper lip is sweating. It's all the hormones.
So how is that, right? Being two, about to be two young children, family, and then running several different companies. How have you? And then, when I ask people this before, some people in the comments, they're like, well, you never asked men this question. Well, it's different for men because we don't have the same responsibilities as the woman has, right? So
I agree.
I have to ask the woman the question because it's different being a mother than being a father. So how have you been able to manage all of this simultaneously?
Yeah, I think there's just different seasons at different paces. You need to be running fast in different seasons of your life. I believe that women can do it all and have it all, but I don't think we can do it all at the same time. And I had to renegotiate with myself how fast I was running at work in order to be able to prepare for motherhood. And, this is an intense 3 to 5 years where everybody's going to need mommy. The hidden trick for most successful women who are able to do this and run their careers is actually their partner and who they pick. I think that's not talked about enough because it's a privilege to pick your partner. And I know so many women, especially Black women, don't feel like they have an equal partner. But I was very much like unwilling to have kids or get married if this person was not going to be sometimes even 60-40 them when it came to kids, knowing the physical and mental adjustments that I was going to have to make for 5, 6, 7, 8 years while these kids are young. I think that's the one secret people don't really want to talk about.
Can you talk about that then? Can you say okay, what's important? What was important for you to recognize in your husband? What's important for women of your caliber? Because like you said, it's difficult, right? You're a CEO, you're running around, you're flying around. What does that companion look like as far as on the male side?
Yeah, I mean, I needed an alpha, and I'm a super alpha. So I needed a mega alpha. I needed somebody who was like, girl, sit down, and was really comfortable with that. I mean, when I met my husband, he didn't even know what Blavity and Afrotech was. So, here I am, walking in like, I got a lot going on, and he's like, girl, I don't know what you're talking about. Like, you're just cute with curly hair to me, you know? And, you know, who are you when you don't have all those titles and all that extra stuff on you? It was such a blessing to meet a man in that time of my life who couldn't give a rat's butt about what I did and how much money I made and all the people I was connected to. He liked the fact that I would light candles in my house. You know what I mean? Like just random girly stuff. And I think that the more you can find people in your life that like you for you, even when you're a high achieving woman, where your whole life you have been focused on achieving for your career and your value is based off of what you've accomplished at work, because that's what you sacrificed for, it's so important that you find a person who doesn't actually care about those accolades. Because here's the thing, if I stopped working tomorrow, he would love me just the same. In fact, he'd probably be like, thank God she can finally pick up after herself. You know, like, thank God, you know? So I think that's really imperative, is like your relationship cannot be codependent based off of the value you bring to the table from a work perspective. And for a lot of high achieving women, it's hard for us to decouple that because it's how we spent and sacrificed so much to get to where we are.
Well, kudos to your husband, and congrats to y'all on the new extension to the family. I want to go back into CEO mode for a sec, in terms of acquisitions, because I'm sure there's a lot of people who are listening who have businesses and they're thinking like, oh my gosh, maybe I want to get invest. What are you looking for in terms of the next sector? Like you said, travel and leisure, we found Travel Noir. Yeah. What's not in the portfolio now that you would like to acquire or are looking to acquire somewhere in the next 3 to 5 years?
Yeah, so when people are thinking about acquisitions, this is my general framework. Number one, is it cheaper for me to buy you than it is for me to build it? So it's either got to be cheaper for me to buy you than it is for me to build it, or it's got to be faster, which is actually for all three of my businesses, it was faster. Like it's really hard to build trust in the Black community. It was faster for me to buy a brand that was around for 7 years in travel than it was for me to try to build that. It would have taken too long. And I was trying to run fast. A lot of these AI companies that are getting eaten up, it's speed. They're trying to get as big as possible, right? As fast as possible, because winner takes all. So you got to put yourself in that position. And then the second thing is, can this run without you? Okay. Most small businesses in this country, 80% of them have an employee of one.
Yeah.
I'm not buying anybody that is fully dependent on that founder, because the moment that founder decides to chill because they just got a big payday, the business doesn't perform.
Yeah.
And then we have conflict because now you're not going to get your earnout. And now you're talking about, well, I'm not getting this money. And I said, well, you're not delivering on the goals that we had assumed in our projections. And now we have conflict. I don't want any more conflicts. I got too much going on. Okay. So, you know, in these days, I get acquisition offers often. Like people are like, please buy my company, especially in this kind of market. And right now I'm like, let's do a joint venture. Let's partner. Let's see how it goes. You know, let's have some chips in the game and see how we both execute, and then see what the return on investment is. And then we can talk.
And under that framework, what makes a good part? Let's say there's someone tonight that may want to joint venture or partner with you. Yeah. What's like a perfect model or framework for them to be able to approach? And what are you looking for inside of that business?
Yeah, it's got to be something I can't do for myself. Again, either you got to be doing it cheaper or faster than me. That's where most people mess up. It's really not that hard. Like somebody's going to email me tonight and be like, you should buy my event company. And I'll be like, I already have an event company. Why do I need another? Yeah. Right. Or you should buy my recruiting is an area that we're looking at. So because we have hundreds of companies that already recruit through Afrotech, we don't do it for them. Right. We give them access to the community, but it's on them to make the deal and make that exchange. We've thought about, well, maybe we should do it for you. For a price, we should be willing to help both the person looking for a job or the company looking to match. So I've been looking slightly. Now, I'm not talking about just a recruiter who was laid off who wants me to buy them. No, like a recruiting company or agency that specializes in technical roles. You know, that's something that I've had my eye open for.
Morgan, we appreciate you. I want you to tell them about the book. Like in detail. Like, what can they expect from reading the book? What do you want them to get out of the book? The whole gambit.
Yeah. So as you can see, I'm very direct, no sugarcoating. I think there's very few business books that are written for us and that show you the game in terms of how people think. Things like how Silicon Valley makes decisions, decision-making frameworks, thinking about how you move fast so that you can outpace your competitors without burning yourself out. So rewriting your rules is basically every chapter starts with a little story of how I built something or how I didn't, like how I missed payroll or whatever. And then it tells you the framework on how I got out of it or how you could apply this to your life and whatever your goals or dreams are. So you can get it at rewriteyourrules.com. And also there's tons of free workbooks and all types of resources that are online as well.
Sure, man. I like your decor. The backsplash is very nice touch.
Oh, thank you. This is my husband's office because it is more masculine than mine, considering your audience. So I was like, I need your office.
Somebody did the analytics.
That's a
I was like, I need you to take the Legos off. But other than that.
No, that's fire. That's fire.
Beautiful
for sure. And keep up the great work, keep up the advocacy.
Yeah.
I know we was texting a lot during the pre-election.
Yeah.
Yeah, it was a lot going on.
Yeah, we got to do a collab. We got to figure out. You guys let us know in the comments what you want Afrotech and EYL to do.
Let's do it. Let's do it. Let's do something at InvestFest. Let's figure it out.
Yeah, we could do that. All right, y'all. Enjoy.
All right.
Appreciate you. Thank you.
Thank you.
Thank you.
There you have it, ladies and gentlemen. Shout out to Morgan.